Hello everyone, welcome back to my channel. So this video marks the end or the wrap up of week number 15 in this Road to 200k challenge. This week ended up being positive, especially considering the complete disaster that it was last week. And there are quite a few developments to talk about, and so we're going to cover those, and we are going also to have to incorporate some more calculations into our scoreboard, because we are on a recovery mission here to try to rescue Estée Lauder back from the brink from where it dived in last week after the apparently disappointing earnings release. And so let's get into it. So basically this week, of course, the biggest highlight was on Tuesday with the U.S. election, and markets, the U.S. stock market and markets in general apparently enjoyed the result of the outcome of the election. Apparently, former President Donald Trump was re-elected, and unexpectedly so by an apparent landslide. The predictions on the polls were expecting a very close race, but it ended up being, in my view, a lot more lopsided than it ended up was initially expected. And so markets enjoyed and appreciated that outcome, and so they reacted positively. Stocks went up all across the board, and in our case, American Airlines, which is no longer in our portfolio, as you can see right here, and most of the stocks in general appreciated, except Estée Lauder. Annoyingly, Estée Lauder went down on Tuesday. And there's a reason for it, because given the promise by President-elect Trump on erecting or aggravating the tariffs on Chinese products by 60%, allegedly. That's what has been the talk about in terms of the promises of President-elect Trump. And of course, investors understand that if this promise is fulfilled by President-elect, it's expected that China will fight back and will also aggravate the tariffs on US products. And so, given the fact that Estée Lauder is quite exposed to the Chinese market, this does not bode well for the future earnings of Estée Lauder, and so that's why the stock went against most of the market and went down on Tuesday. And so and I believe it was by a quite significant amount at the time. And as you can see right here, it gapped a little bit and then came down. It recovered a little bit at the end of the day, but then and this was the outcome of the election. As you can see, it continued to come down. It ended up recovering a little bit on Thursday, but then yesterday it came down again. However, most of the market enjoyed that outcome, and so and this trend continued across the week, over the week, even though on Wednesday there was a slight correction, but on Thursday again markets continued to go up. And in our case, given that we had in our portfolio Lyft stock, Lyft also released its earnings on Thursday, and those were quite significantly have increased quite significantly, and so they went by quite some margin up, and they exceeded the earnings expectations. As you can see right here, they beat the expectations by 42.7%, and as a result, the Lyft stock, even in pre-market, on Thursday, it was up by 20%. This in pre-market negotiation, and so the stock basically burst through our strike price of the calls that we sold. If you recall, we placed our strike price for the lift calls on 14.50, and as you can see right here, and even before the trading day started, the stock was already upwards of $17 and remained that way for the rest of the week, and that's why we were assigned. You may ask, of course, why did you set the strike so low, knowing that earnings were coming? Yeah, it could have gone either way. It could have tanked, it could have skyrocketed as it did, and at the time, there were no more options available, or the options with a higher strike price available were simply not worth the premium. And in the absence of this knowledge that we now have, it was the most appropriate move at the time. And as things stand, of course, we could have sold the stock a lot with a lot higher price, but yeah, it is what it is. And now we broke even on pricing, so we still collected all those premiums in the meantime. And I'm not unhappy with it. I'm happy that we finally got rid of Lyft, and so we also got rid of American Airlines through a different way. But the thing is that with American Airlines, since Tuesday, the stock went up, and it hovered around 13.80, 13.90, without ever reaching the strike price of 14 that we set for our calls, as you can see right here. And so I decided that, given the situation, since we want to focus now on rescue Estée Lauder from the hole it got in, and given the fact that, as you can see here, the current price of acquisition for American Airlines were $13.72, my decision was that at the end of the trading day of Friday, when the options we sold would be very close to expiration, at that time, when it became apparent that the calls would not be assigned because it would expire worthless. And so if the stock would be hovering between around 13.75 and 13.95, what I would do is that I would simply buy back the calls, and by doing so, the collateral of the stock would be released, and I would be free to sell the stock and realize the sale by receiving the cash back from the sale of the stock. And so, because at the end of the trading day yesterday, Friday, as we speak, the stock did exactly that. It was hovering around $13.80 at the end of the trading day. So I realized, of course, at this point it will not reach 14. The stock will not be sold through the calls. So what I'm going to do is to buy back the calls to release the collateral from the shares. And so this is exactly what I did yesterday. I bought those back, right? And then the collateral, the stocks were no longer used as collateral, and so I decided to sell them at 13.77. So I pocket a very, very small capital gain, and of course we still got the premiums from all this time that we were holding American Airlines. So this is also a calculation that we need to incorporate in our scoreboard. And so yeah, as you can see, also by the way the markets closed, American Airlines stock expired below 13. So as you can see, below 14, and so the options would expire worthless. And so at this point in time, I'm happy that we also got rid of American Airlines, at least with a small capital gain. And so now is the time to focus our efforts on what remains in our portfolio, which is basically 4 and Estée Lauder, with a big focus on Estée Lauder at the moment. On Pfizer also came down over the week, but that was because of he paid the dividend. As you can see right here, he paid the dividend. It didn't pay a dividend yet, but the stock went ex-dividend date on November the 8th. So that means that now, as we speak, today is November the 9th, I can sell the stock, and then on December the 2nd, I will still receive the dividend, regardless of what I do with the stock, regardless of me holding it or selling it. And so that's why the stock went down. It entered the ex-dividend. It went into ex-dividend, and so when it happens, the price always comes down. And so now we'll have to see if next week we are able to sell some calls on this. Again, keeping in mind that the strike price has got to be our acquisition price of 28.50. And so it's going to be a little bit more difficult probably to sell calls on Pfizer with a price this low, but we'll have to wait and see what happens. For Ford Motor Company, even though it came up by the time the election results came out, but the stock never really went up by that much, and so I'm not expecting to be able to sell calls on it in the coming week, especially given the fact that, yes, currently it is not available at 13.50, given the fact that we need to cover this acquisition price of 13 plus the loss on the call we had to buy back sometime about 2 months ago. So yeah, we have to wait for the stock to eventually come up and see what happens if we can at the end sell some calls on it to try to get rid of it. And so for the time being, also, as I mentioned in my last video, I'm going to focus all my efforts on buying more Estée Lauder stock, and that's exactly what I did. I'm also planning to use this buying power to buy more shares of Estée Lauder, as long as it keeps this price, this such low price of around 63, 64, 65 dollars a share, and see if we can bring down the average price as much as we can when a small rebound happens, we are able to get out of the trade without having a capital loss on it. And so this is how the week went. Now it's about time for us to basically include our trades in our scoreboard. So as you can see, there were some acquisitions that I did. So this is still from Monday, and now let's see. Yeah, this is still from Monday, because this trade is already input here. I had to change here to buy. Of course, I had to adjust our scoreboard to make sure we have also additional options such as buy or sell outright. All right. So to make sure we keep a proper track of what we are doing. And so it starts now right here on November the 5th. And so as you can see, these are basically transactions, exchange transactions which happen automatically. We bought some more Estée Lauder stock on Tuesday, 150 more stocks. And so this was the price at 65. So let's put into our scoreboard. And now, basically we forgot to put in this. We now can make this change for November the 4th, because now we adjusted our scoreboard accordingly. And this is correct, because we bought these 300 shares on November the 4th. As you can see right here, it was just as if it was 3 contracts, so I'm not going to change this. But now, let's now keep track of the other ones. So there's no need for us to leave here a date for expiration. for at least for now. So now it's going to be a buy, and the price was 65. Now, because the fact that we have bought an uneven number of shares, we bought 150 shares. Let's just pretend that we bought 1.5 contracts so that we can keep our scoreboard consistent. All right. And now, of course, we received no premium because we bought the stock. And now we paid also a fee for it, so it was $1.01 here. Now the next one that we did, we also bought on Wednesday 90 more shares with a commission of €1, right? And with a price of acquisition 64.27. And so now, after all of this, we'll have to see how much we managed to lower our average price. So I'm also quite curious to see how it panned out. So this was 90 shares, so it was 0.9 contracts. And as you can see right here, the price, the amount of money we paid is $5,784.30. This matches the value that is in here, and if I'm not mistaken, we paid exactly $1 of commission, and that's exactly right. It's right here. So moving on to, this is on Thursday. And we bought 40 more shares, and we also paid $1 in commission at the price of $64.98, right? So this is 64.98. We bought 40 more shares. We paid $1, and now also here, this is done. I assume this is correct. Yeah, it is correct. 2,599 euros and 20 cents. As you can see right here, this is absolutely correct. Now, for Friday, this is where we had more trades to input here. So, as you can see, we bought back this American Airlines calls at the price of 1 cent. We receive also a credit 161, right, for buying back those calls. So now we have to input here. Yeah, wait, let's just do it like this. Let's just copy. Yeah, and we bought those back, and we still received a credit, and this was closed. All right. And so as you can see here, yeah, it was still a good return. We managed to get 50% annualized on this particular call. And so we did this. Now, as we see here, we use these funds to buy more shares. We bought 190 more shares at the price of 64 yesterday, as you can see, and we spent in fees $1.01. So now we are going to copy here. This one is the same. Price of 64, correct? So yes, at the price of 64. This was 190 shares, so 1.9. And we paid $1.01 in commissions, and this is exactly the correct amount, because as you can see here, and if we pull our calculator, you'll see that 6,680 plus 4,480, this gives us a total amount paid of 12,160, which matches the amount we have in here, which we paid. All right, so this is done. All right, and now given that we already paid all of this. Now it remains to be seen whatever is left for us to do. So we sold these shares again on Lyft. All right, so now well, we also need to include here our American Airlines sale of the shares. So we sold, and we sold them at 13.77. Yeah, basically it was 9, and of course we received nothing in return, but we basically paid in commission $5.04. So 504, right? And so by doing this, now we can see how much did we pay for it, because now what we can see here, let's just do this and let's see. All right, so this is correct. Yeah. All right, because we paid this. Yeah, this calculation here, actually, let's see, because there must be a way for us to do this differently, but for now I'm gonna have to review this as it goes. But now let's just erase this because this doesn't really matter. Right, now what we are going to do is basically saying this. We're going back here, all right, to our American Airlines. As you can see, it already reflects the price we received from this last call that we sold. And now what we are going to do is basically the following. So we come here, and now given the fact that we need to get rid of this denominator, right? Because this denominator is no longer relevant for us, and now we are going to use this, which is yeah, basically plus. So it's, yes, it's plus, right? Three contracts, yes. So now we're going to need to redo this. Put it here, plus the price at which we received, which is this one. And now we are going to do the same in here. Let's see. Yeah, so this is the one. Yeah. Now I'm going to open here a parenthesis, because yes, this is minus and minus. All right, so this is correct. So now let's see. So this is the price at which we received. Right. So now this is not actually correct, so I may have to review this calculation and then see at a later stage how can I change this, because this is not correct. We indeed had a capital loss on this, but this is not the actual amount, and so yeah, this is correct. No, let's go back to our original form. Make sure that, yeah, this is the amount that we had. So I'm going to have this calculation later to make sure that this is correct, because we had a capital loss here of 23 cents per share, but we actually gained 27 cents per share here, so we actually end up with a capital gain. And as you can see, these are 5 contracts and these are just 4, so we ended up having a capital gain, but I will have to see later how this goes. Yeah, let's just keep it that way for now. And yeah, basically this is it. Let's just also close here our lift, because our lift shares were sold. Now, of course, we didn't pay anything on the way out. These shares were assigned. Now, these were assigned. And as you can see here, when we sell them, what we do basically is put here on green to make sure that we know at the point at which we sold these shares back. All right, and now we are going to go back here to the lift. Let's take out this yellow because this yellow is no longer relevant, and we're going to basically put here a 0 because this mark to market is no longer relevant. And in here, let's just take an example from this one right here. This one also goes green to make sure we know that we changed here. And now, yeah, basically we use the, so this G69, 69, yeah. This is also a trade in which we broke even, so we don't need to do anything here. Basically, we are going to take away this in here, this parcel in here, because we broke even. We sold at the same price at which we bought, 14.50. As you can see right here, we managed to sell them at 14.50 and we received this much money. So we broke even basically, and so there is nothing to be left here. So this is it. This is the money that we got back. All right, so these 500 shares were sold, and now let's just put here this way. Let's see where it is. Yes, this is it. Let's just take, for example, here, and let's just put it down here. All right, so let's just put here the comment, because now this is 500 shares sold, wheel done with 0 capital gains. And how much do we profit? It was $810.79. So this one is out of the way for good, right? 810.79. All right, this is correct. Exactly. So this is done. All right. And now let's see here, because now we have this one, and let's see. Yeah, this is exactly how much do we have to sell these shares in order to break even for these particular shares. But now we are going to see, and this is something that we can do right now. We will be able to see how much were we able to close down or to bring down our average price. So let's see, the last one was at 281, which is right here. So now we need to account for these 4 as well. And yeah, this exactly, so 281. So now plus, and now we open another one and we close it, and inside this parenthesis we're going to put this particular price times let's see, this one. yeah, actually this is not correct because this will be a mistake. Wait, so it's H, G, and yeah, this is G. Exactly. Now it is correct. Wait. I may have done something wrong here, I think. G1, G1, G, yes, G6, G82. Yeah. Because now, yeah, this is G282, which is correct, G282, and this one, which is the H282. So if we take the previous one, yeah, now this is correct. We managed to bring down a little bit. Now, it's better to do it in here. We can basically copy this one because these are basically the next one for 283 and 283. Again, the same thing we have to do here. We copy this. It's easier to copy than to typing. And now this is 284. All right. And the last one is, it goes all the way until the 285. All right. Perhaps this is not the correct way to do it because I still need to account for the commissions, but this is just to have a slight idea. I can then make these slight adjustments off the screen because I need to account for the commissions, which are very, very tiny on relative terms, but still this is something that we need to account for. And the 281, 282. All right, so this is done, and now we're going to need to sum. All right. Options log is exactly 64 to 35, 6. Exactly. So now what we need to do is basically put here a plus and then copy here, 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 and here, and plus 282 plus 283 plus 284 plus this is probably not correct, 282, 283, yeah, 284, this goes away, and this is 285. All right, and so we managed to bring down to 81.97. So this is a much better number. Of course, we may need to do some adjustments to make sure we also take into account these commissions, which we did not. All right, and so, but yeah, we are making good progress, and right now at this point, if we are able to recover from the current price, which is around 63.90, yeah, this is currently around 63.88. So if we manage to get back to around 81 something, we will be able to break even for sure. But for the time being, yeah, this is it. I'm still gonna have to make a few adjustments here to make sure that everything is correct. But I will show those adjustments on the next video because I don't want to take too much time with this. But yeah, next week the plan is going to be the same. We're going to try to acquire as many Estée Lauder stock as we can, and of course we'll have to wait and see if we are able to sell more calls on these stocks, either for or Estée Lauder, to make sure we can also sell them and realize some more cash. But yeah, for the time being, this is done. Feel free to leave your comments below, and your suggestions also in the comment section below, and also feel free to send me a message on LinkedIn if you want to discuss or make any other questions privately. And of course, feel free also to like the video and subscribe to the channel. This mission, it will keep on going, and of course we'll reach eventually the end of it. And yeah, I'll see you all at the beginning of the next week.